Guys, this has been an unbelievable day in the market. So the market was down about 1 point, the NASDAQ, and I watched the NASDAQ because I have a short on the NASDAQ, so I focus on that. The NASDAQ was down about 1.4% earlier in the day. Then the Fed came out within literally 2 minutes. The market was up a ton. And now look at this. The NASDAQ's down 3% with 8 minutes to go, 3.2%. Guys, this is nuts. This to me just says, like, we have had so many days of these massively wild fluctuations. This is not a stable market. This to me is an overpriced market. Now, am I fitting this to fit my bias of a maybe? But I look at this saying, if you were healthy, would you have massive fluctuations in your health on a day-to-day basis? No. But if you were sick, you might have a day that's awesome and another day that's bad, or you might be great and then all of a sudden turn. That's the analogy I make about it. This is not a healthy market. This is a market that's trying to look for direction because there's a lot of what people perceive to be uncertainty. And remember, in the short run, stocks are a voting machine. So there's a lot of fear out there. And I'm here to tell you, this isn't done yet. I don't care what everybody says. Those experts say we're hitting a bottom, blah, blah. We have not hit a bottom. We might go up from here for a while, but we will end up at a lower point in the market. And I think substantially lower than we are today. How much lower? I believe that we have 40 or 50% left to go in this market. Is that extreme? Maybe so, but I want you to understand something. Warren Buffett says at any given time, the stock market to GDP ratio is the most accurate measure of valuations at any given time. So I created my own based on the S&P 500, and our users of our community love this thing. So let me update it right now. The S&P is currently at 3761. So I'm going to put in the number 3761. We are currently 57.7% overvalued. Fair value is 2384. Now, you might sit there and say, that's crazy. Maybe it is, but here's the scary part. The ratio is 1.466. We go back to 2000. The ratio at the peak before anything started to fall was 1.461. We've already fallen 20-some%. Guys, we have more to go. Remember, the pendulum swings and we're never going to be at fair value. You're always going to be above or below. Now, can this get better? Guys, this will get better. Fair value will get better as GDP goes up. But so margins will probably decrease as time goes on. You have to remember these things. And usually the market goes below and above value. It doesn't stay at value. That's the big key here. So what I mean by that is, this is the stock market's value over time, but this is how stock prices go. They still go up, but they're going to be over and undervalued. And that's the big key here. And we're still trying to figure out where we need to go. We have a lot more to go down. And I'm not trying to be fearful. I'm not trying to sit there and put doubt and uncertainty in your mind. Absolutely not. Because you know why? I guarantee that if the market fell 50% today, you'd hear me going, this is awesome. Start buying. You're going to see probably more pain, but these will be great values to get great long-term results. And I truly believe that. But right now, it's not looking good. Going back to 1929, when we're overvalued, we get an average of 2.3% return, not including dividends, over the next 10 years versus the average of 6.6. But the bad part is this is at 57.7%. And in history, when we're 30% or more over, we end up losing 0.1% in price over the next 10 years. So just remember that going forward. We have a lot of uncertainty out there. And the Fed has said that they're probably going to pump the brakes on raising rates, but it doesn't mean stop it. It might mean 0.5 point or 1/4 point increases from here on out, because their goal is still to decrease inflation. That is the most topical conversation right now. I wouldn't be surprised if Biden's giving him pressure saying, listen, I know rates suck, but I need you to raise those rates because I need inflation down. Just like when Trump took office in 16 and 17 and told Powell, you are keeping those rates low, even though Powell had said he wanted to raise rates. They're still human beings. There's still public and political pressures in their life. I do think Powell knows what he's doing. That doesn't mean he's going to do what the right thing is or the thing he believes he has to do. You sit Powell in a room when he's done being Fed chair and give him a bottle of whiskey, and I'm quite sure he'll say he wanted to do things differently than he's actually doing them. I don't blame him. I don't have 330 million Americans, and the President of the United States breathing down my neck, trying to blame me for everything that goes wrong. And guess what? If it goes right, he's not going to get those accolades. But your job as an investor is to sit here and say, what does it look like from here on out going forward based on what we see? And rates are not high historically, guys. What's the 10-year treasury at right now? The 10-year treasury historically is about 4.4%. And right now, it's at 4.08%. Okay, it's still below the historical average. That's still below the historical average. If you take out the early 80s and late 70s of interest, in the 80s of interest rates, the average is close to where we are today, 4.2%. So we're about where we're supposed to be. But of course, we felt it very quickly because of a very quick rise, and we see inflation. It's all these things working together. But remember that a year and a half ago, if you look at our past videos, when I was saying over and over, guys, we don't know what the spark in the room will be, but something will cause the market to fall. It has become so far inflation and raising those rates to fight inflation. That's been what's given the pop in the balloon, and we have more to go. So I need you to do me a favor. We make 2 or 3 videos a day, and it's high quality stuff. Subscribe to the channel if this makes sense to you and this interests you, because we make great videos, the most content out of anybody I know in the finance industry. We do live reactions. It is currently 3:59 p.m. Eastern time. Go check when we posted this. I'm guaranteeing it's within the half hour. Thank you very much, and please subscribe.